Zach, I remember the beginning of 2020.
Yeah.
Markets were really, you know, hit new highs. 2019 was a tough year.
Rocking, yeah.
And then markets hit a high in February, and we were all looking pretty, we were like, okay.
Feeling good.
Feeling pretty good. Tax cuts, Fed's lowering interest rates, the economy's starting to rock, no big fears. And then I remember talking to Ian, who's got a friend in Hong Kong, and said, there's this thing out there in Hong Kong, it's bad.
Yeah, and I think that was discounted a lot by SARS and MERS, where people said, okay, it started in China, it'll get cured or it'll get resolved, and really took a back seat to it, which obviously didn't happen. But that's right, Ian kind of flagged it as to say, okay, this is something that's coming.
Yeah,
we should be aware.
Yeah, I remember reading about it and thinking about this highly infectious disease, and we wrote that. I did all that. Going on the CDC website and reaching how many people get the flu every year and all that kind of stuff. We sort of did the math and went, if this is even worse, then you're going to get 30 million people are going to get infected with this thing pretty quickly, and it's going to go. And I remember our investment committee meetings and making decisions about Booking.com and Disney.
Yeah, that's right. And that kind of started too when the lockdown, when China actually locked Wuhan down. It was like, okay, this is serious. That's right. We made a couple really good sales there, just being precautious, having a lot to do with valuations too, not just the pandemic. But I wonder what the takeaways will be. In a year or 2, 3 from now, what are the takeaways of, what you've seen? The markets, as you point out, hit new highs, and everyone's feeling pretty good, and then all of a sudden, the fastest downturn that we've had, and now, in early December, the fastest upturn we've had. I mean, the zigzag, I wonder what the takeaways will be of the speed and what to do and how to react in markets.
I've been doing this for over 35 years now, and it's really amazing how every time you think, okay, the crash in 1987, record, and the 2000 tech wreck, and crisis after crisis. And I remember when that first broke and the market was falling apart, and we said, the minute it hits the shores of North America, we're shutting down and we're getting out of here. And remember that, and remember we have these indicators we'd look at, and the stocks were down a lot, and we're going like, we had a lot of cash. Do we put the money to work? But the pandemic seemed so bad, and the valuation seemed really compelling. But you look at it and you go, I don't know.
Yeah.
Like you don't know. Maybe this is the end of the world. And things were being priced that way, but they weren't really being priced that way. And I think we're going to look back at it like we've looked back at everything and say, once again, the government comes to the rescue.
Yeah.
And there's been that whole issue about moral hazard, and governments are always bailing out business and people and the stock market, and is that a healthy thing or not? And I think at the depths of this whole thing, everybody sort of went, you got to do something.
Yeah, here we go again, and you better act.
You better act. And this word, it's like, I hate this word, unprecedented, but it really is unprecedented.
The other thing too, though, is sticking to a plan. So, an investor has a plan, and they say, okay, I'm 70% exposed to stocks. You always hear and read in the papers that, okay, the market goes down, and these people say, that's it. Like, I'm out, I'm selling. And, I had one of the smartest people I know put some money to work a week before the low. And they thought, okay, this is it. The market's come down 25%, here we go. And the market ended up going down another 20% in that 1 week after that. And that person just said, like, I'm not putting anything to work right now. So having a plan, I think, is important too, where you say, okay, here's my mix, here's where I'm comfortable. And you almost take a back seat to say, okay, yes, things happen, unprecedented, but, how are things, Main Street, okay, what are we looking at? And saying, I'm still comfortable with 70% in stocks. This is my plan. It's a 5-year plan or a 10-year plan. This is 1 month. So 1 month out of 5 years, not a big deal. Let's take a bit of a breather, which is extremely difficult to do. Even someone like me in the business, I find it very challenging. But I think that one of the things on the speed side is what's your plan over a longer period of time? Because as you mentioned, previous market declines and rises happened over longer periods. Now it's record down, record up. Who knows what it's going to be next time? To stick to that longer term plan, I think might be a takeaway. We'll see.
Yeah, I agree. I think, I look at the way our clients behaved and the way we behaved. I mean, first, to think that we'd be up, 8 or 9% this year or more.
Yeah.
When the year's not over yet,
Yeah.
we wouldn't have thought that.
Yeah.
And I'm really proud of our clients, the way they behaved, and they kind of wrote it out. We stuck to our knitting. And really the durability and the results the clients have experienced have been a testament to the quality of the companies that they own their portfolios. And since the election, it's been, we were really banging the drum saying these are good quality businesses. They provide important services, products. They're run by good quality managers and CEOs, strong boards of directors. And you look at Disney, one of the companies that's been impacted the most by this pandemic, and they're just shy of record highs again. But it does raise the question. I mean, like we sold half our Disney, but we didn't sell it all, thank goodness. And it went down to like $80, and here we are up in 140 and change. And so these companies, there's a lot of argument. Like, is that expensive now? Yes, there's a vaccine. We're seeing the end of the whole thing. Like, I don't know. Like, Disney's at $145. Should we, try to time the market here and take some money off the table? What do you think?
Well, that's the hard part too. Is when do you get in and when do you exit? We did some selling beforehand. We did not get the top. We did some great buying as the pandemic was moving through, not at the bottom, and realizing you can't get it right. Sell right at the top and buy right at the bottom. But that's a good question. I mean, you're looking forward here, and the markets. I think it's also important to take what you said is here are the companies. Yes, they're high quality, and then here's what the markets are doing. And the markets are probably looking pretty far ahead. You have some great vaccines. There are going to be bumps along the road in terms of administering it and getting it out to people and everything. But the companies we own are great. They're adaptable, which is important too, like Disney, in terms of the parks aren't as profitable anymore, but the streaming side has done much better than they expected. But it is important to focus on the companies and then see what the markets are doing. But their markets are probably, given where we are now and what we've seen so far, post-election, probably a little ahead of themselves. So, committing a full portfolio back to work probably wouldn't be the smartest thing to do right now. But again, if you have a good high quality basket of stocks in a diversified group of sectors, I think you will hold up over time. And as you pointed out, interest rates are low and we've been saved.
There is no alternative.
Yeah, we've been saved once. Not that that's a good reason. I think it's more important to focus on good, high-quality companies there. But the vaccine, who knows what's going to happen there, and maybe we see the markets come off a little bit. But that's a very difficult question. But I do think that in the longer run, let's say more than 1 year, you will have those vaccines get administered, and we will be in a better place overall.